Hello everyone. Recently in all my pre-market videos, as a part, I added this FII data detail analysis. And when I'm doing it, I was really amazed. The amount of data and details we can get about FII from NSE India website, which is really incredible. So in this video, we are going to discuss those in detail, like what it is, what are the things we need to keep tab on it, and to some extent, what is the present status, etc. Without delay, let's get started. First of all, every month, SEBI releases this monthly bulletin in their website. For example, this is the August month bulletin. If we click the Excel data, then we can download the August month trade data, which will give 75 trade related statistics table, which is really incredible and very much useful. Here, I don't want to go into everything. Rather, I will just explain couple of important ones, number 38 and number 40. First, number 38. Who owns how much derivatives, otherwise percentage share in open interest? If required, please pause and have a look. These stats are very important when we analyze the FII data. Here the takeaway is, for this financial year so far, the percentage share of FII open interest and the proprietary traders open interest is roughly the same, whereas the others like retail traders holds the majority of the open interest. This year so far approximately 56%. Hence retail traders drives the market, but they are like millions of different small water droplets. There will be no coordination at all, so it's difficult to judge them. And about proprietary traders, I think NSE or BSE or NSDL not releasing their trade detail information, so we can't analyze that. However, NSE releases the very detailed trade information about FII. So if we look at just FII, means they are only near 11,000 entities, and that 11,000 entities holds 19% of the total derivative open interest in NSE. And if we apply Pareto principle, which is nothing but 80-20 rule, then comes as just 2,200 FII controls the 15% of the total open interest in the Indian market. Please think for a second, 2,200 people owns 15% of the total open interest in the Indian market. Hence only understanding their mentality is utmost important thing for the short-term traders. Hope everyone able to follow me. Now moving to the table number 40. It's just for information only. Always in NSE, the amount of open interest or turnover in Bank Nifty is at least 6 to 10% higher compared to Nifty. Hence, Bank Nifty is the most influential index, not Nifty. For this year so far, every month, roughly Nifty's derivative trade volume was around 35% and Bank Nifty's trade volume was 42 to 45%. Then Fin Nifty was near 16% and Midcap Index was roughly 6.5%. The remaining are the others. This is the rough index derivative trade volume, and please always remember this, and also every month end when SEBI releases the stats, please remember to check. I mean, based on my experience, knowing all these stats indirectly will help in the decision making. Now coming to open interest analysis. As we discussed multiple times in the NSE India website, we got all these statistical documents which we can download and use it. Here I would say 3 documents are important. 1. F&O participant wise open interest. 2. F&O FI derivative statistics. And 3. F&O client positions percentage greater than equal to 3%. These 3 highlighted are the ones we need to check every day. First, let me open the third one, F&O client positions percentage greater than equal to 3%. Why is it important? Because if we trade in the stock future or stock options, we need to know how many clients hold those shares open interest above 3%. I mean, if our stock we plan to trade is listed in this space, means then itself we should avoid trading on it, because if any owns 3% of the open interest, means then he can easily manipulate that stock price. For example, look at this Bank of Baroda stock. 6 people holding over 3% of the stocks in the derivative market. So if those 6 close to those positions, means then that will affect directly on the stock price massively, I mean, it can be favorable, but also it can be unfavorable as well. Hence, we have to be careful. Also, very, very important, we need to check for any index stocks, particularly index heavyweight stocks. Again, if the index stock or heavyweight stock like Reliance or HDFC Bank, etc. is listed here, means she or he can manipulate the whole index. So in order to be cautious, we have to check this every day. Now coming to the second document, it's very, very important. F&O FII Derivative Statistics. This document will give how much FII bought yesterday in the F&O market, how much they sold, what is their current position, etc. More importantly, very, very important, what they bought in future market or an options market, or even better, whether in Bank Nifty or Nifty or any other index, all those details. Now for 20th September, I calculated this. In the future market overall, last Friday, September 20th, they bought near 300% more future index than what they sold on Friday. Now the important question is, then what they bought? Did they bought Nifty futures or Bank Nifty futures? I mean, overall at present, they got Nifty futures open interest for over 32,000 crore rupees, and then they have Bank Nifty futures for near 10,000 crore rupees. Then as per F&O participant wise open interest document, we know at present 76% FII was long in the future index market, which means out of that 42,000 crore rupees, 32,000 crore rupees was invested in the index long position. Others we can ignore it. Nifty just 158 crore rupees. Next Nifty 50 just 50 crore rupees. Hence I'm guessing those two index won't get manipulated by FII next week. But it can be manipulated by Indian local traders who got change like 1000 crore rupees pocket money. I mean, one way or other in the stock market, big fish always eats the small fish. The only way we can survive is by hiding and carefully moving behind the very, very big fish like FII. Anyway, back to analysis. In contrary to the future market, whereas in the option market, in all the index Nifty, Bank Nifty and Fin Nifty, yesterday all they bought and sold was roughly the same percentage, but remember, not the overall. Now I'm going to ask you a question. We know they bought a lot of future index, both Bank Nifty and Nifty, and in the options, by the look of it, they are using it for hedging purpose. Here the question is, in what scenario FII will be profitable? Please pause and think for a second. The answer for that question is only if the market moves up. Hence only on the second week of September, when the market was down, they used the options market to manipulate Nifty, and again on the third week they manipulated the Bank Nifty. Those who watched my last all week pre-market videos, they can easily relate to what I'm saying. Basically, FII plays a long game. Hope I'm not confusing. Then regarding the first document, F&O participant wise open interest, I already made a separate video as how to do option open interest analysis beyond support and resistance. I will provide the video link in the description and pinned comment. If any haven't seen the video, means please have a look at that first. Basically in that I explained how I calculate what's the stance, like FII or DII or retail people, what they did. For example, in this case at present FII bought more call options and more put options. On the other hand, retail peoples were more sellers. All those details in that video. Now on top of what I explained on that video, I added the put call ratio calculations. For example, how much FII have long put call ratio, how much short put call ratio. Similarly for retail people and proprietary traders. For example, at the end of last Friday, FII sold put call ratio was 1.75 and FII's long put call ratio was 1.36. Now conclusion, combining all. At the end of last Friday, 20th September, FIIs have more long put options than long call options. As we discussed, their long put call ratio is 1.36, meaning they have some downside protection and are hedging against a market decline. However, their long future positions and long call options showing they biased towards that they will get more benefit if the market increases means. And the short put call ratio of 1.75 indicates that FIIs believes the market won't fall too sharply as they would benefit from keeping the premium from selling these put options. Hence, overall, if the market rises moderately, FIIs will likely to benefit the most as their long futures, long call options and short put options all will perform well. So that's it. In order to trade every day and not get eaten by big fish, we have to combine all these data with the news, fundamentals and technical analysis. Hence, we can take an informed decision. I mean, to be honest, nobody can predict the market accurately. It will do crazy things. If I say I can predict, then I am lying. I certainly don't know what will happen. Anyway, because now I have this YouTube membership community, I started uploading my FII data analysis Excel document every day with the explanation. At present, because of the starting, it's little bit rusty, but as time moves on, I hope I do better. In addition, I will post technical analysis as well. So consider joining it. Please note it. I won't recommend any stock or index since that's illegal and I don't want to do that. Rather, I will share my portfolio and if I buy any stock means then I will share those as well. Final very important thing. Quite often, most people don't look at the F&O FI trade value. Here, please note trade value, not the trade volume, it's trade value. I mean, 90% of the time, option traders follows the cash market FII value, but not the F&O FI trading value, like how much they bought or how much they sold. Hence, please give importance to that, and there also sometimes we can find the pattern. So that's all in this video. Hope you all got some information. Please consider subscribing to the channel and liking the video so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing this for me and viewers educational purpose only. Thanks for watching.